The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome, everybody, to another exciting edition of the Power Trading Hour. On me, your humble, lovable, and squeezably soft host. Once more, we go into the breach, dear friends, and as always, we meet between 2 and 3 p.m. each trading day.
The following takes place between 2 p.m. and 3 p.m.
Every trading day. Then I'm not on vacation, I guess. So, what else do we have going on here today? Kind of a light variable market. We certainly have a lot of volume. What I also see is a great deal of many stocks that had short squeezes earlier in the morning and continuing short squeezes. We had some positions in the daily newsletter, and they were kind of adjunct plays, i.e. if everybody was right about some of the other sectors that everybody was yelling and screaming about, these sectors had to go up and probably would go up more than the other sectors. So we had three positions. We walked away with two 45% winners and 110% winner. So I'm doing my little superior dance for the next 5 minutes, as I always do. And then I'll go back to being the slug that I was before, so I don't get too big of a head. Anyway, very interesting markets out here. You see penny stocks start to run, and normally you have to think that it is very close to the end of something. That's what we were out there doing. We were playing some of these less expensive stocks. Normally, I have two modes, and that is at highs, I want to short very expensive stocks with options, if at all possible. And at lows, I want to buy stocks that are 50 cents, $2, south of $5, let me put it that way, because that's going to be the biggest bang for the buck. You're going to be able to get those kind of 45 and 110% moves in a handful of days. What did we we did them last Monday, so yeah. I mean, we were in and out by 7 days, 5 trading days. So what else can you do about that? Is there more to run on those? There could be. But basically, we had the biggest single day in iron ore since 2008. That's when actual world records started to be accumulated. Before then, there was kind of this Baltic Dry Index, and it was whether or not mines in maybe Brazil or elsewhere around the world, maybe Australia, were shipping iron, but there wasn't anything to really give you an idea what China and some of the other Pacific Rim countries are doing. So they came up with this new index in 2008. So if you hear this is an all-time move for iron, it is, as long as they've been keeping records, but who knows before that, because no one did. So, when you have a huge move and everybody's talking about things like the move in iron ore, normally I loved being in the position I was in the last week because no one in the Tiger's Den was talking about it. Nobody on TV was talking about it, but they got kind of close today. We had some big wins. We decided to take the money and run. And I guess my 5 minutes are over. Now it's time to go back, and I will only be as good as my next trade. But a nice little taste out there. Iron trades Dave has forever. I don't understand that. Anyway, nice little move out there. We were actually in the shippers. So that was it. We were banking on all these shippers that if the iron price didn't go up, they were going bankrupt, and did extremely well. So you might wander off into that sector and take a look and see what the action's been like in the shipper market lately. Other things going on. Well, we need to start the show off. We like to start it off with a little bit of history. So we will get started. History repeating.
Then it's all just a little bit of history repeating.
I think I get the iron trades Dave has every day forever. It has. What it hasn't had was the component of China. And the index everybody's quoting on CNBC today is that index that started in 2008. Like I said, everybody kind of knew what the West was doing for iron for all kinds of years. It was very unclear what happened and what China was buying until somebody actually went and started keeping records. And that started in the first quarter of 2008. So we are now seeing those numbers. So when people tell you this was the all-time move, it was the all-time move for those new world records that were started in early 2000, I think the first quarter of 2008. If you want a link to the website that everybody's quoting on those iron numbers, you can give me an email at path@tfnn.com. In the meantime, we're flat on the day, and we've got a little bit of history coming. On this day in 1876, 29-year-old Alexander Graham Bell receives a patent for his revolutionary new invention, the telephone. The Scottish-born Bell worked in London with his father, Melvin Bell, who developed visible speech, a written system to use to speak language to the deaf. And, of course, in the 1870s, the Bells moved to Boston, Massachusetts, where the younger Bell found work as a teacher at the School for the Deaf. He later married one of his students, Mabel Hubbard. Didn't really say in there whether she was deaf or not, whether he was able to use and call his wife on the telephone. I always wondered that from reading that earlier today. But probably the biggest single technical innovation by itself, in the fact that with telegraphs that was fine, but the phone system actually let individuals talk to each other. What else do we have out here? The average bonus for folks in the security industry dropped to just $146,200 last year in New York from $160,280 in 2014, according to the New York State Comptroller. Kind of interesting to see a market that went almost always sideways and not see a huge difference in that. It's down a little bit. Of course, New York has sky-high taxes, and any little bit hurts them a great deal since they get a monstrous amount of cash from Wall Street. But I thought it was kind of interesting. The article was kind of making a big deal out of being $14,000 lower. I was wondering why it wasn't $80,000 lower, but that's just me. Cashing in, legendary New York Stock Exchange floor trader and floor operations for UBS, Art Cashin, turns 75 today. For the most part, there are a bunch of lying weasels and spineless skunks that appear on financial infotainment. He doesn't seem to be one of them. Not always right. But I don't get the sense that he's one of these guys that is constantly lying, or lies at all, actually. I think he's been a pretty straight shooter. Congratulations on...
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're going to look at a few stocks out here. Looks like we're kind of getting toward the end of a move in gold ABX as we look at it today. Kind of getting up here, got to 1480 on Friday. Didn't quite make it today. A lot less volume out here. No sign or, not that I would be shorting any of this. There is no sign. We've talked about the double repo pattern, and there's no sign that we would get it in this, but I thought maybe what we would want to do is at least talk a little bit about it. This thing has remained above the either 3x3 displaced moving average or 9-day moving average. It's continued to move up. It hadn't closed underneath it yet. Could you get a standard retrace? You could. If this thing does not do some kind of double repo pattern out here, then you would probably look for a pullback to get in some of these. And we can look at that in just a second. What I did want to say is, you've had this thing basically holding above the 3x3 displaced moving average. We could also do just a traditional 9-day moving average. Let me clear that up and make that one a 9. There we go. 9 is kind of the same kind of thing. I just wanted to be able to show you both out here. But a close below it, a close back above it, and then some kind of big sell signal back underneath it would give you pause. Short of that, it is really tough to see anything other than a traditional retrace in this at the moment. But as we look back in here, if you are either moving from the 690 low of November 18th or the September 11th low of 595, you're basically looking at the first retracements in just a 382 back to 1178 or 1142. So you'd probably want to look back into those levels once they start coming. The confluence range is way too wide to be anything other than a congestion zone, so not a great deal happening out in that one. You can give me a call at 877-927-6648. Some of these stocks coming off the bottom have tested their lows on lighter volume. We're starting to get these first bounces. Unfortunately, these things are not making their way up to any significant level. We basically are just a little bit below confluence levels in a lot of stocks. If we were in a bull market, the stock I'm looking at now is AGENIUS, AGEN. Has one that I really like at about 560. If I thought that this thing was really going to start moving up significantly higher, I'd probably be in it, of course. But didn't, a lot of these had some short covering off the bottom. As we get back into these previous highs, like the January 21st high in this one, volume's a little lighter. 3.6 million shares on the first bounce. Now we've got 2.1 million shares, and we can continue seeing bounces out here. AEM. What do we have? This one certainly doesn't look as good as the last one. You've got the requisite amount of days. You've closed below it. You're going to close above it. You really need Anglo to go sideways out here. You don't want this one to really start pulling back. But, you don't have that big move. $32.49 is the 382 on that. My guess is that that would be the first possible spot to pick this up. Let's look back a little farther. The energy in this thing was pretty good. Let's shorten this chart up just a little bit more. If I can. Okay. I'm on the wrong chart. What is it? AM, yeah. Okay. These are both kind of set up the same, and that is you have these congestion zones. I wouldn't call them confluence levels. They're too wide. But this one back at about $30. Maybe this one would pull back a little bit farther than the 382. You'd probably want this thing just above the 29, 23, 29.55. Probably be kind of interesting. There's a gap where this thing gapped up on the 4th of February on 5.2 million shares. So it's kind of interesting. You've had a lot of dojis before. Well, I wouldn't say, let's say a handful of dojis out here in the last few weeks. I don't know if you can make a great deal out of the doji today, but any close back below that 9-day moving average would probably move this thing back down to that $30 range. That's where I would probably be looking at it. Hopefully that answers your question, Danny. What else? BCRX. Like I said, a lot of these stocks coming off lows. Don't see a great deal off the bottom. I did see IBB actually for the first time kind of bouncing a bit. And that's where you really have to start thinking, well, is this kind of the end of it? That thing couldn't catch a bid. Now it's starting to catch a bid and the market's headed south. At least the S&P is headed south. We're off 3 points now. What do you think about this? And tell you what, I'm looking at some of these stocks that have been coming off the lows, and I was hoping for a little bit more on stocks like BioCryst, BCRX. As I said, I like to buy these cheap stocks when everybody thinks that the bottom is in, and I like to short very expensive stocks. Everybody thinks that, or well, let me put it this way, when I think tops or bottom are in, but we'll continue to look at that. Barclays, BCS, and what else is out there? BHP. Hilton. Of course, we've talked about this earlier in the show, and that is, of course, everybody's getting on the bandwagon for commodities. And thanks for Tom O'Brien for pointing that out over the last few weeks in a making a bunch of cash in the gold market and in this iron ore market. You had a huge move out here. But again, if you are not already long these things, you're waiting for the pullback. Now, there are some good setups coming in these, and that's why I sold today. I figured that we're getting off of to putting in at least a temporary high. But on this one, you've got a fairly nice one in BHP. Goes from $24.67 to $24.92. That takes you just back underneath the February 22nd high that had 5.1 million shares. On the day when it broke through that day, kind of, you had 7.2 million shares, and you gapped up on the next day with 9 million shares. So signs of strength, heavy volume, everything you want. Now what you are hoping for and praying for is the pullback on lighter volume, and trying to find a place that you can buy these. And some of these are setting up, like I said, pretty good confluence on BHP. So hopefully you get the pullback into that area. But pretty good, only about, 40 cents in there. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. We'll look at a few more of these stocks. Okay, what else do we have at? Got a bunch of emails. Tried to answer them during the break. We'll get back to these. Let me get a few of these windows off my screen. And we'll take take a look. Okay. We took a look at BHP. Hopefully everybody's got the screen in the den. CHK. Chesapeake Energy out here. Nice little doji going through its January 5th high. $5.09, 23 million shares. You had 63 million shares. And again, that's 188 million on Friday, 189 million on Friday. Very unclear about how much this is based on maybe closing a chapter with the previous CEO. Of course, hard to have an investigation of somebody and dig through a bunch of stuff when the guy's no longer around. But at the same time, everybody just thought maybe the bottom's in for commodities. I got to jump in as I get a chance. This does take us up to this gap from November 19th, where it gapped down. Wasn't a whole lot of volume, 51 million shares, as we said, already up with 64 million shares. It touched that gap, and that's pretty much been it. So you've had a big sign of strength. You'd probably want to see these things starting to pull back and seeing if they do come back with light volume and whether or not this is just a short covering rally off the bottom or something that is longer. And, of course, we're going to get that on the pullback. Another one out here is Cliff Naturals. This one, talk about left for dead. I didn't know how these guys would ever even think to come back, but huge short interest is one way. And back up to $3.50. Question is just how long the price rise in iron will continue and whether or not that price range is high enough to take care of the debts that these companies took on in the last 2 years as everything started heading back down. This is where, now that you've had your short covering rally in a lot of these, it's probably very important to start looking at the financials in these stocks. And right now, probably the big signal is going back to the October 7th high, $3.73 with 14 million shares. Today, you touched it, you went over it by 2 cents, you pulled back into it. One of the reasons that I was selling out the positions today was seeing some of these out here that look like, you may have gotten just about everything that you could expect. Our first rally off the bottom. You do have to kind of like the fact that the December 15th low that had 12 million shares at $1.42 just went through it with 3.4 million shares. It went 22%, 22 cents lower than that. Once you closed back in the trading range, you could have bought the stock as a low. The energy on the way up was good. The energy on the way down was fairly good. It was just a little bit more on the way up in LF, which would probably point to a decent retracement. 50% is probably where I'd start thinking. And you've got to make sure and see that the volume comes in light on the way back down. Other things going on. Let's take a look at the S&P. We're off 5 points now, no big deal, 3.3 billion shares. So volume is good. And last week that was trending down a little bit in volume, maybe trending back up. Again, you can give me a call at 877-927-6648. California Resources Company, of course, all these resources companies getting it back into what they're up to. This one, you had 16 million shares going against the December 24th, 21 million share day to what are we, 22 cents short on that. So it hasn't touched the top, 16 million shares. You might see a few of these go and try to at least hit these highs, but pretty good. I mean, the downside is a lot of these things have not tested previous lows on lighter volume. And you would have liked them to do that. That's a little disconcerting. But there are a lot of these little resource stocks out here that are hanging on by a loose tooth or like a loose tooth. And probably now that you've gotten the move off the bottom, the first thing to start looking at is whether they're going to issue more shares. They're going to dilute themselves. Do they have enough cash for the moves if you're thinking that you're going to find some ABCs on the way up. Deutsche Bank, you know, not a lot of volume out here. This thing has moved off the lows when everybody was pretty sure that there was some cockroaches running around the Deutsche Bank building. February 9th, we saw 1478 with 10 million shares. And February 24th was the C point. You got pretty decent extension on Deutsche Bank. In fact, look at the extension out here. There we go. Okay. I got some bug going on here. How do I get rid of this? AM DB. Okay. No, it doesn't find any. Okay. You know, you probably have the extension of the C or the D point out here now, up at 20. You had 1478. Went to where'd you go to? Yeah, for some reason I'm having problematic issues out here. What can you say? Come on, zoom on in. There you go. See, 1478 to 1810. You got a $2 and you got a $2 retrace, so that takes you to $20. So basically, you finished your 1-to-1 ABC. Energy on this last leg was a little lighter than the other one, so you probably got just about everything you got. The only other thing out here is that you could make a case, although probably not a strong one, that you have 3-gap play to the downside. And maybe, at best, you would hope for a fill of the 21 to 22 range where the gap down is. What I dislike about this 3-gap play is that there wasn't a great deal of energy except into the second one. That's when this stock came down on the 20th of January with 7.2 million shares. And that's pretty much why I think we're pretty much done with this move, because you're up today on what, 4 million shares or so much. Anyway, probably a completion of the ABC on Deutsche Bank out here. Don't like the energy on this leg back up. So I wouldn't be buying a retrace on this one unless it got back down to 1607. We'll be back in a minute. Give me a call, 877-927-6648. Email me at path@tfnn.com. And, of course, post messages in the den.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced experience and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back. We were looking at Deutsche Bank, completed its ABC up. We'll see. Okay. I don't know if there's anything in that one. Wanted to start looking at how some of these stocks are coming back up. Expetriol SA, EC, and that is today. Pretty good energy off the bottom for this one already. It hadn't even gotten back up to the previous high of October 9th. Pretty good move on this. Certainly a ton of energy out here today, or excuse me, on the 4th. Let's see, we looked at GFI, didn't we? Goldfields, GLD, Harmony. I think we talked about all those. In vivo therapeutics, this one actually had a fairly decent move off the bottom, but getting ready to run into confluence levels. What else do we have out here? SLV. That's kind of interesting. Not exactly sure why. There we go. I need to get... you had a little pop back up here. You did break through confluence, which was nice. You went kind of back down underneath it. You've backed up against it. But this gap down in the SLV looks like it is the trouble spot. That is the gap down that happened on 7 million shares back on the 29th of October. You first came into it with 21 million shares, which should have been enough to get into the gap and finish it off. Pulled right back down yesterday, or let me put it that way, Friday, you came into it with 18 million shares, and it sold off. Today, 3.8 million shares, if that's right. Looks to me like maybe you've got a consolidation time now setting up. Sanofi, let's see if there's anything else at any of these other ones I was looking at. I was just looking at a lot of these stocks that were bouncing off the lows. Let me see if we can't find anything else in the bigger stocks and seeing if they're making any big headway. Amazon basically up to the higher levels, and there's kind of a nice confluence gap that goes up to 575, and kind of got about $10 over the last few days. Probably more important is this big gap down in Amazon that sets up what I think is kind of a trading range. That gap down happened on the 29th of January on, let's call it 14.7 million shares. We got into that, or kind of got into that, on March 2nd with 4.5 million shares. Volume has been kind of light and variable. Even today, as we start to pull back, not a great deal. You kind of have to think that, 529.50 would be a 50% retrace. Amazon doesn't seem to retrace just a little. Seems to, 50% seems to be kind of a deal, or even a 618 or a 782. Doesn't seem to be light. Doesn't seem to just kind of dip its toe in the water, at least off these highs going back to December 29th. Energy, of course, is not huge off these, or huge off these, but you do have three gaps, and those three gaps could take you all the way back down to this gap up day, which is the 10th of February, and the high of that day was 504 and the low was 491. So you've got a couple of gaps to look at on the downside out here. I don't know if you could really make a case for this being a three-gap play either. Volume has been fairly light, and I don't know if there's anything more to say about that. Going to check in my inbox. Of course, this one taken care of. Let's see what else we have out here. Let's take a look at some of the other stocks that are moving today. Let me get those up and running. If you can give you just a stack. Movers. Okay. Let me get these going up here. Just a second. We'll get into the change. Well, Momo doesn't seem to have any Momo. So let's take a look at that one first off a little bit. I haven't looked at this one for a while. I guess you can't make that much out of this one. Yeah, you've got two gaps above it that would take you back up to the high, but you got basically into this first gap down that had remained open. That gap down was the 11th of January. That happened on 2.8 million shares. You had more volume than that, but it wouldn't hold that price, at least. That also gets you above the 618, which was 1307 on this. Is that right? Or 14? Yeah, 1307. So you went above that on Friday. Only had 2 million shares. So you had a lot more out here today on maybe a little reversal. Again, you got a nice big gap up on the 23rd of February with almost 7 million shares. And of course, that's a 50% retracement. So if you were thinking about something and trying to get a Momo stock actually named Momo, then you would look at the $10.72 50% retracement. I think you'd probably want to be somewhere in there, maybe 1050, 1025, and see how much of that gap you could fill if it comes back with lighter volume. We looked at Barrick Gold, GDX, Anglo Asante, Vail. We haven't looked at Vail, so why don't we look at that real quick? Okay. Don't see anything in that. Genius, BHP, Harmony, All Source. We've looked at all those. Whiting Petroleum. I haven't looked at this one. Let's take a quick look. WLL. And, back out here at some lows. This thing did test its previous low, but not that much lighter volume. Went to $3.35 and broke the previous low that had 39 million shares. So just 5 million shares lighter. I would have liked a great deal less. What you did have was some monstrous volume off the lows. And off that February 25th low, on Friday you had 75.6 million shares in this thing. Went right up and has gone to this January 28th high, which is $8.25 with 32 million shares. Even today, 49 million shares already. Pretty good sign of strength off the bottom out here. So at this point, I probably would not be shorting crude, although I think you could get a decent pullback in them. But 592 would be a 50% retracement on this. So you might get a fairly decent percentage move. We'll be back in a minute. Still plenty of time to call me at 877-927-6648.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. Just a few minutes left. Of course, we go into the Tom O'Brien Show for the last 2 hours of the day here at TFNN. Be very interesting. We're really starting to head into the earnings cycle for a lot of the retailers, in fact, clothing retailers, and the little pullback that we've seen. In fact, let's take another quick look at it to see where we're at. We're off 6 points. Not a big deal, but what are we off? 13 points off the high of the day. Probably going to be a real mixed bag with those. It's kind of heaven or hell for them. A lot of people are very short on them, so if they don't totally horribly disappoint, we could get some bounces out of them. But I don't see anything that made me in the last few weeks think that everybody had headed to the malls, even with the cold weather. Didn't see a lot of people down here. Talking to the people up north that I know, they didn't really see massive amounts of the Mongol hordes heading for the mall to buy any clothing. So we'll have to keep an eye on it. I saw a lot of people down here over the weekend for vacation. But that's it. Anyway, 1993 on the S&P, cash off 6 points. Not a big deal at all yet, but we'll continue to keep an eye on it for the end of the show. Well, we looked at Whiting Petroleum, and like I said, I mean, even if you have these huge moves off the bottom with lots of volume, it's not uncommon to see these things hit the previous highs and then kind of at least want to consolidate out here. So you might want to be looking at that. We'll go back to some other ones. We looked at CLF. I mean, so many of these stocks out here. Valiant, this one's up. VRX earlier. VRX. So look at this one. It's up. I don't think you can make a lot about it out here. Man, you got energy again from the high. You've broken out the previous low from the November 18th low. A little bounce out of here. Not a lot of volume so far today. You know, you had a bounce with the IBB. Man, you know, the first thing you would hope for if you are someone who's asking me if you could buy something like this, and man, I would say that you'd probably want to see a good consolidation set up before you would ever think about buying this. And by consolidation, have a lot of people lose interest in it. I hate getting into these wild stocks where everybody's always talking about them on CNBC, and the next bunch of short people are wanting to short this stock, or at least they're saying they are. My guess is that what you would be seeing or what you'd be looking for in a sign of a bottom is a great deal of these shorts starting to get out of it. We saw that last week with, I think, was his name Lead or Led from Citron, saying that he was out of Valiant from being short. So maybe a few more of these guys out here starting to go short. But normally what you will start to see, if there is anything in this, is a long, flat, fairly tight level hold for a while somebody's accumulating. And I don't see any sign that there's a bid underneath this other than a one-day bounce out of here and a whole lot of volume. You'd want it to test the 59.89 of March 1st, and I don't think there's anything or any sign out here just yet. But of course, this is going to be a wild stock. We'll see you tomorrow. Same bat channel, same bat time. Remember to sell when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.